So we are here trying to make money on the 50-minute chart. So we are looking for a setup where the market is bullish and then we are going to enter our trade. It's pretty simple actually, and we are looking for something that looks kind of like a bullish flag. So here it goes. Here in front of me is the EURJPY, and I can see the market is here going to the upside. We are forming higher highs, higher lows here. The market is retracing, so this looks like a trend line. So now I'm waiting for the market to go to the upside. Here chances are the market will go higher. Here I can see the break above the 200 EMA. So what I want to do here, once the market pushes to the upside, I'm looking for buys for a new level of high somewhere around here. So now I'm going down to the lower time frames. So here on the 1 hour chart I can see this kind of free touch strike trend line, which is here my third touch. So the market here suddenly broke above the 250 EMA here. If I take my fib from this lowest point to the highest point, the market here came back to my blue area right here and then pushed to the upside. And if I add here quickly my RSI, I can see here this divergence, which here was my lowest point, my starting point for this free strike trend line right around here. So here is my first touch, here my second one, this break, here my third touch, and then the market now zooming in here broke to the upside with this huge bullish momentum here, breaking this trend line right around here. So now I'm going to the lower time frames looking for a setup for an entry right around here. So now here is the 50-minute chart. Here is my inner trend line break on the 1 hour chart, and here the bigger one right here. And then now if I zoom in here a bit, I can see here the cross above the 200 EMA. Here my first new level of high breaking here in this area right around here. Here a small retest before the market bounced to the upside. So here is my next resistance area that I want to see broken. So now I just let the market run. And here now this area is broken. So now I'm looking for higher highs, higher lows, and then an entry point. So now I just let the market run. I zoom in here a bit. What I might here now consider is somewhere around here. Might be a trend line, which is about here. The market pushing higher. So now every time I see a gap like this, as we saw here as well, I want the market always to come back to the 50 EMA. So here, this yellow line, which is my entry point, I never want to buy here, even though you see the market here bounced off to the upside. This might work on the lower time frame, since this here looks like a pretty bullish flag. On the 3-minute chart, 5-minute chart, this would have been a trade to take. But here on the 50-minute chart, for now, I don't want to enter around here. I want the market to come back to the 50 EMA levels. So now I just let the market run, and let's see what happens here. So now the market here is coming back to the 50 EMA. I'm looking here maybe for a trend line. Maybe I can draw one right around here. So I'm always looking for a third touch here. I can consider this to be the second one, or this one to be the second if I take this longer one. Depends on my trend line, but they are both pretty nice. So I'm looking here for another touch of this area right here. So I just let the market run and see whether we can pull back. Since here this was my highest low right around here, this whole structure, and here was now my highest high. So as long as the market remains here within this area and doesn't break, I'm still bullish. And here around these levels is my trend line. So it might be not this wick here, I'm not quite sure. The market might still go a little bit lower, but I'm just waiting here for kind of a free touch trend line. So now what I see here is this huge candlestick followed by 3 big candlesticks. These 3 candlesticks right after this bullish one, which also could be considered a doji one, this can be considered maybe 3 soldiers right after this bullish pump to the upside. So here now I'm breaking this red candlestick. So this could here now be my third touch, since for now this is the lowest point. I still haven't broken this structure. Here was my lowest point. So the market is still bullish here. Now I'm breaking slightly to the upside. So now after this third touch, I might look for entries on the lower time frames, since here I can see this is my third touch on this inner trend line and the outer trend line as well. So now I'm going to the lower time frames to look for my first entry. I'm going to switch to the 5-minute chart. Here is my 3-strike trend line, and this here was my lowest point. Here we can see this whole structure still not being broken. So here this whole structure was still not broken. Here was my lowest point on the 5-minute chart. Now this is considered my 3-strike trend line. If the market breaks lower, then I have to readjust my trend line, but for now this here will act as my trend line, because you never know. Now if I look at this structure, the market might still go down, but for now I'm waiting for a bullish sign still. But this now I'm considering my 3-strike trend line. So now if I let the market run, I can see now the market is breaking with this 5-minute candlestick above the 200 EMA, so I might not consider my bottom. At the same time, what I want is here this area now to be my left shoulder, which here had kind of a double shoulder. Then this is my head. So I want the market to retest this area, this candlestick, this green one. If I zoom in here a bit. So right around here I want to see a retest, and this is my entry point. Somewhere around here. So I'm not entering just right now, but I'm just here targeting this area, and then I'm looking for a setup. But here this, something like this would be my entry, and here my trade would be somewhere around here targeting the previous highs. So this could be my setup for now. Again, I'm not entering, I'm just waiting for the market to give me a sign, but this here is a setup that I might want to see. So now I just let the market run. So now the market is slightly going to the downside here. So now here the market came twice back to here, my left shoulder, my first one, which is around here. If I draw my smaller trend line here, let's just quickly change colors. So here this is my first shoulder. Again, here's my entry point. So now I'm waiting for a better setup to enter here. Since this would be my first trade on the lower time frames, which is not the trade on the 50-minute chart, this is just an extra trade that I'm looking out for. So I just let the market run here. So now here the market came back to my second area of this shoulder right here. So after this green candlestick, I might go to the lower time frame. So we go now to the 3-minute chart. So here on the 3-minute chart, here this is my second area, my lower shoulder, which was retested here, and then on the 3-minute chart right after this, the next candlestick here was this huge engulfing one right here. So this here might be my entry point right around here. My stop loss still here this low, so I'm entering right here targeting the previous high. So now I'm going to the 50-minute chart once again. So here now on the 50-minute chart again, here was my 3-strike trend line. Now here is something like a double top. So here is my inner trend line, here might be my outer trend line. So again, here was the first setup where I didn't enter the trade. Here my entry point was this one. Again, my target here, this level. But since this was my third touch, the market might go pretty much to the upside. So now I'm looking for my entry point. So now here I have a break above the 50 EMA. Usually what I want to see is a candlestick breaking from the downside, so meaning from below the 50 EMA and then crossing and then closing at the top, something like this. But I wanted the start or the beginning of the candlestick below the 50 EMA. This might still be here an entry point, but at this point my stop loss would have been here, so I might still enter here and then target new levels. But here again, if I entered the trade right here, my stop loss would be way too big, so I might somehow reduce my stop loss or wait for a better entrance. So my stop loss might here be below this candlestick. Just to give me a better risk reward, I would have to consider my stop loss maybe here. This could now be my left shoulder. So here I would take my stop loss if I enter right here. Since we broke now this outer trend line as well with this fully engulfing candlestick, the RSI is above the 50 levels and the MACD here crossing the 0 levels. So here this might work out. I had here my third touch. So now I let the market run and let's see what happens. So if this candlestick here would have closed completely like this one, below and above the 50 EMA, then this would have been my entry point. But you see here, this one works out as well. We came back here slightly lower, below the bottom of this candlestick. So I took this left shoulder right here for my stop loss, because my first stop loss was this higher shoulder pattern. So I took here now the higher one for this stop loss, and now the market just pushed to the upside. So my first target here would be the previous high. So on the smaller, or my first entry, it would have been a 1 to 3 risk reward. Here on the bigger one, on the 50-minute chart, a 1 to 4. So I'm going to go a little bit higher than a 1 to 4. So just let the market run, since here I'm assuming after this third touch a new level of high. So here I can see now the market pushing to the upside. So here, a 1 to 6 on the smaller entry point, the smaller trade, and here the bigger one, a 1 to 3, 1 to 4. Here the trade is still on, I'm still not exiting. So now here we're getting closer between the blue and orange line on the MACD. So here now might be my exit, which is here exactly where I previously stopped. So now here, this would be my exit. So I want to 3.8 risk reward on the bigger trade, and here on the smaller one, 1 to 6 roughly. So now I'm going to show you another example of a similar trade. So here again I have a bullish market. The market is going to the upside. Here somewhere around is my 3-strike trend line, since here is my first huge wick, my second one, and the market now is coming back to the 50 EMA. So similar to the previous setup, here something like a double top we had previously. Here slightly diverged, so this one is a little bit higher, but the market here is still not breaking this structure. So here a similar setup. So I'm just letting the market run, looking here for a trendline break as we saw previously. Since we came here now to the 50 EMA, here might somewhere be my 3-strike trend line. Again, the market might always come back, maybe to here or to here, but for now somewhere around here is my 3-strike probably. Here if I draw my inner trend line around here. So now I let the market run. Now keep in mind we're still at the 50 EMA, so this is what I want. We are pretty far away from the 200 EMA, and here now we are closing this space. So this is my perfect setup. So here now the breakout. So this is what I was talking about previously, since on the EURJPY example I didn't see a fully engulfing candlestick breaking from below the 50 EMA, then breaking above and closing at the top. So here this will be my perfect candlestick where I want to enter right here, my stop loss slightly below this wick of this candlestick, and then I target new highs here, since we are bullish on the 50-minute chart. Since my previous high wouldn't be enough for me, this risk reward would be pretty low. So here now I just let the market run and let's see what happens. So here we hit my first target, which would be here 0.9 risk reward, so not worth it, which means I would here go much higher with my take profit. And here now we can see the market pushing to the upside here with a 1 to 5, 1 to 6, adding here the MACD once again So here I have still room before the market comes to the downside. So just let the market run. Now here getting closer between the blue and orange line. So now here I can see the market are about to cross each other. So here I'm exiting with a 1 to 5 risk reward. And here suddenly the market broke to the downside. So here this was my 50-minute chart setup. Now I'm going to show you an example that I don't want to take. So here now we have again a bullish market on the 50-minute chart. Broke above the 200 EMA, forming higher highs, higher lows right here. So now I just let the market run. And here we are breaking below the 50 EMA. So I'm still looking now for probably a new break. Here this whole structure is acting as a resistance line. So I probably need here a new high before I'm looking for my setup. We reached the 200 EMA, so this might still work out. But if I look at this pattern, this bullish flag is pretty deep and pretty steep, so the degree level of it is probably not the ones that I'm looking out for. It might still work, but not really my favorite trade. And here if I let the market run, so now here is a big candlestick breaking above the 50 EMA, but my initial trend line was broken already with this candlestick. So now the setup isn't the perfect one, since I want this candlestick breaking the 50 EMA from the bottom or from below the 50 levels, but at the same time breaking this trend line here as well. But here I had two candlesticks. I might still enter here, or this might still work out, but I wouldn't personally enter here. Again, this bullish flag isn't too nice in my eyes, and here this break was with two candlesticks, so my stop loss would be here below this first candlestick. So it might still work out, since we have here still kind of a free strike trend line around here. But it wouldn't be probably not my favorite trade to take. So just let the market run. And here, yeah, it worked out. We came to the upside here, 1 to 2, so adding my MACD to look for my exit. So here now the market pushing pretty high. Again, I don't know if I would have entered here. The bullish flag a little bit too deep, and here it took us two candlesticks to break above. But if I would have entered, then here this would be, now I'm just showing you how to exit. So now here again the orange and blue line are coming together, so around here would have been a 1 to 2 risk reward. Again, not the best setup, but would work. So now let's see, since we broke here this structure, what can happen next. And again, here we came to the 200 EMA. Usually I want to stay at the 50 EMA levels for this trade. Now we're seeing a pullback to the 50 EMA and to this area. We are retesting here this resistance area now as a support area. So what I see now, or what I want to see, is here a free strike trend line, which here might be happening. So now I take this as my first touch, this is my second touch, and here this would be now my third touch. So again, coming here to this area. But again, what I see here is the market coming back to the 200 EMA. Usually I want to stay at the 50 EMA, because at the 200 EMA we might always break, which is here the break point. Either we go to the downside or we continue to the upside. So the 50 EMA is my preferable EMA. So I might now consider this to be my third touch, somewhere around here. If I draw now the inner line of this trend line, which is around here, then here this is my third touch. But what I see here is we came back to the 200 EMA again. The 200 EMA might always break, which means we're not completely bullish. We're still bullish. If we take a look here, the market is pretty bullish here, pretty uptrend. But the 200 EMA, as we see here, might always be broken, and then the market might continue to the upside. So I want to stay at the 50 EMA. Here this was already pretty close, because just 1 week here retested the 200 EMA. Then we came to the upside. Here we can see we stayed at the 50 EMA. Huge candlestick break, then to the upside. And also what I see here, this is not really a bullish flag, since this space here was too big. Looked more like a head and shoulders pattern on the lower time frame, so the market came lower. not really a bullish flag, now turning more into a wedge, which is something that I don't want to see. But here it is again, was my 3-strike trend line. Let's see if we could enter here. So here the candlestick broke above the 50 EMA and it broke above my trend line, so it was one candlestick breaking above the trend line and the 50 EMA, but it wasn't fully engulfing here, a lot of space, this wick is pretty huge, so I don't want to enter here. And again, we retested the 200 EMA couple times, too often, here just once. Here this candlestick was pretty nice, but here it took us 2 candlesticks, so here I don't want to enter. But let's say, just for the sake of the video, we enter here, stop loss slightly below the candlestick, target here or higher. Let's see what the market does. So here we can see the market broke below the 200 EMA, so I don't want to enter here. This is an example that I don't want to take here. This one would have been possible, but still not something that I want to trade.